Okay, our attention is now shifting to this year's winner of the Deutsche Bank Prize in Financial Economics, Professor Shiller. And I mentioned already your affiliation, but I haven't talked about little segments of your biography, so please let me do that to complete it. Professor Shiller received his PhD in economics from the MIT 2 years after Bob Merton received it from the same institution, so there are common roots despite different views on some of the issues now. Robert Shiller has been a research associate at the National Bureau of Economic Research since 1980. In 2005, he also served as a vice president of the American Economic Association. He regularly writes the column Economic View for the New York Times, so I think he has a very, very large audience with his ideas. And in 1996, he received the Paul Samuelson Award for his book Macro Markets, Creating Institutions for Managing Society's Largest Economic Risks. There's many more aspects I could mention, but I will stop here to leave the time for your talk. Thank you. The floor is yours now.
Ich fühle mich geehrt, diesen Preis zu bekommen. Es gibt viele andere Gelehrte, die so einen Preis verdienen. Ich schulde Dank der Deutschen Bank und dem CFS. I will continue in English in a minute. I'm not done yet. Isaac Newton sagte, wenn ich weitersehen könnte, so deshalb, weil ich auf den Schultern von Giganten stand. Und so dachte ich, ich werde über die Geschichte der größten Erfinder in Finanzökonomie reden, die Giganten, die unser Weltfinanzsystem gegründet haben. So kann ich Ihnen die wichtigen Fragen unserer Zeit präsentieren, die wir in unserem Finanzmärkte haben und wohin wir gehen können nach der Finanzkrise. I wanted to give the whole talk in German, but there's a couple of problems. Some of you don't speak German, right? So, I was for those of you, I was thanking the Deutsche Bank and the CFS. I wanted, before I begin, also to thank Jan Kranen and Michael Haliassos for creating this wonderful conference, and to thank Sabine Neumann, who has been our host all the time here. Since I'm thanking people, I thought I'd also thank my wife, Ginny, who's sitting over there. Because she has been an important shaper of my thinking over the years, and she's a psychologist, and you'll see in a minute how she's influenced my thinking. But anyway, as I was just saying in German, I want to talk about the history of what's really talking about now, but I want to put it in the context of the history of financial innovation and of the people who brought us here. And I'm hoping that will give some light on the current situation that we're in. The basic mission of finance is risk management and incentivization to prepare for economic growth in our society. And in order to achieve that, we have to be inventive. It's not simple and obvious. And there are times when it's especially important to be inventive. I'm thinking here in Germany right now with the recent victory of Angela Merkel. It appears that there is, once again, with a different political situation, a chance to do things that will make for a better economy. Merkel had a charter for a sustainable economy that she proposed. And the G20 meetings a few days ago in Pittsburgh incorporated that into their statement. They called it Core Values for Sustainable Economic Activity. So the impetus is here. We have now an international commitment to economic change. There's a lot of idealism being expressed. But I'm wondering, and this is the theme of my talk, what do we do? And I'm not going to be giving proposals, as we've heard this morning. I'm going to be just putting this all into a historical context. And so the real thing that I want to emphasize is that what we need is invention, innovation, creative thinking. That sounds like a truism, but I'm going to try to put some meat on that idea. We want progress, economic progress, not bailouts. We may need bailouts in the short run, but it always has to be done in the context of progress. Inventions are what moves our economy forward, economic or financial inventions. Once some idea is developed, it tends to be copied all over the world. That's partly because we don't have very effective patent laws against copying of financial inventions. Maybe I shouldn't complain. I actually own 7 patents on financial inventions, or my company does, but they're not so common. And so inventions in finance tend to spread very rapidly, and I guess that's an advantage. And so that's what I'm going to be talking about. But I also want to start with some basic themes, that inventions in finance are driven by certain intellectual processes that I want to mention first of all. First of all, they're driven by economic or financial theory. And we need a theory to make a consistent and coherent invention. In that connection, I wanted to say that I am very honored to have Robert Merton here, who is one of the most important people in the development of mathematical economics over the last 30 years. He and the others in that field, I think, are fundamental to our chance for hope and progress in the future. It just occurred to me as I was sitting here, I was talking with Michael, I was just reading your father's book about 3 days ago. Robert K. Merton wrote a book called Social Theory and Social Structure in the 1950s. And it's a wonderful book. I recommend it highly. But what really struck me about it is it has a chapter called Self-Fulfilling Prophecies. And in that chapter, he launches off into economics a little bit. When you were how old? 10 years old. And he talks about how an economic depression can occur if everyone gets scared at once and they all stop spending. And he devoted an entire 2 pages to behavioral economics. I'm wondering, Bob, if your father's creation, incidentally, the term self-fulfilling prophecy was not used before. I checked by searching electronically. He coined that term. So I think your father is the founder of behavioral economics. And I don't know whether you will admit that there's any youthful rebellion has an influence on your thinking. Also, I would add Luis Visera is another important force in financial theory and the linking of it to econometrics with your work with John Campbell, particularly on strategic asset allocation. That was bringing economic theory to a powerful, closer to use. So another thing that helps us a lot is that we have behavioral economics. And I thought Nick Barbaras, wherever he is, right there, did a wonderful job of laying out. There has been an important revolution in economics and finance over the last 20 years, and that is bringing psychology into the field. And it is essential to progress in financial innovation that we incorporate our knowledge of human psychology. That means if we're going to be engineers, we have to be what they call in engineering departments human factors engineering. We have to design our devices so that they work for real people and they work around the foibles of people. Bob had a great story about a mortgage lender who helped him even though he didn't know what his mortgage rate was. That's a sign of good human factors engineering in finance.